Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. Just so you know, the companies that we talk about here can be found on incomeinvestors.com. You can find the link to the website in the description below. When it comes to investing, most people like to quote Warren Buffett or investors like Bill Ackman. And fair enough, they're successful billionaires. But when it comes to current economic environment, we should be looking at Marty Zwick. Not familiar with Marty Zwick? He was famed American investor and a market forecaster, known for his lavish life and owning the most expensive home in the US. He's famous for saying, "Don't fight the Fed." He coined the term in 1970s, noting that Federal Reserve's policy has an overarching correlation in determining the direction of the stock market. And you can see this play out with AGNC Investment Corp. They're traded on Nasdaq under symbol AGNC. John?
Yeah, thanks, Mo. Little background. AGNC Investment Corp is a real estate investment trust, or REIT, that invests primarily in residential mortgage-backed securities. Now, admittedly, in the past, mortgage-backed securities played a big role in the last financial crisis, so investors may feel a little nervous about mortgage REITs like AGNC, but important to know that it does not invest in all types of mortgage-backed securities. Instead, its main focus is residential mortgage-backed securities, or MBSs, that are guaranteed by the Government National Mortgage Association, better known as Ginnie Mae, the Federal National Mortgage Association, Freddie Mae, or the Federal Home Loan Mortgage Corporation, or Freddie Mac. With principal and interest payments guaranteed by a U.S. government-sponsored enterprise or a U.S. government agency, these securities can provide a predictable income stream to AGNC. Now, I say can, not will, because the company is still susceptible to domestic and global factors, especially the Federal Reserve's monetary policy, which has a direct impact on the Treasury and other fixed income markets. Case in point, on October 30th, AGNC announced that its third quarter results included a net loss of $1.02 per share. Now, that compares to net earnings of 30 cents per share in the same period last year. Now, at the same time, the company president and CEO, Peter Frederico, said that, and I'm quoting here, in an environment where Treasury securities experience considerable price stability and the market struggles to find new equilibrium, agency MBS typically underperform, end of quote. And that's exactly what happened in the third quarter.
And John, I actually read that press release as well. On the plus side, Federico also said agency, again, I'm quoting, agency MBS remain historically attractive on both an absolute and relative basis. Once the uncertainties associated with the current environment subsidized, and he believes that a durable and attractive investment environment will emerge.
Yeah, and that was certainly tested just 2 days after reporting its third quarter results. On November 1st, the Federal Reserve left its key interest rate unchanged. And while the U.S. economy has slowed, future rate hikes were still on the table, though at the time, Wall Street took it as a sign that the Fed was done raising interest rates during this cycle, and that the Fed would, in fact, start cutting rates in 2024. At its December meeting, the Fed held its key lending rate again at a range of between 5.25 and 5.5%. This time around, though, the Fed signaled that multiple rate hikes were likely on the table in 2024.
Both of these announcements had a huge impact on AGNC stock. If you look at the stock chart, you'll see that they tumbled in the back half of October and didn't move after reporting a big third quarter loss. But after Fed's announcement on November 1st, AGNC stock ripped higher, advancing more than 20% during the month.
Yeah, and with only 2 trading days left in the year, AGNC stock has rallied an additional 12.5% in December for a 2-month gain of approximately 39 to 40%. So despite the big gains and the third quarter loss, Wall Street remains bullish on AGNC Investment Corp, with analysts providing a 12-month high share price target of $12 per share.
And I think this proves the point that you can't fight the Fed. And moving on, John, what's happening with dividends here despite this big quarterly loss?
Oh, well, because AGNC is regulated as a REIT, it has to legally return at least 90% of its taxable profits to investors through dividends. The company has a monthly dividend rate of 12 cents per share, which comes out to an annual yield of 14.3% at the current share price. Now, how can it maintain such a frothy monthly dividend when it's reporting a loss? A little history. In 2022, it had $3.11 net spread and dollar roll income per share and declared $1.44 in dividends. Now, dollar roll is a trade that shorts MBSs, generating profits when the value of MBS securities fall. Now, fast forward to today, in the third quarter of 2023, AGNC generated 65 cents per share in net spread and dollar roll net income. That is well in excess of the 45 cents in monthly dividends it paid out in the entire third quarter. And since its IPO in May 2008, AGNC has not missed a dividend payment, though it has reduced it most recently during the 2020 health crisis. Still, since May 2008, AGNC has returned a pretty whopping $46.84 per share in dividends.
John, thank you so much for your insight. AGNC Investment Corp is a great mortgage REIT that saw its share price and monthly dividend payout take a hit during the opening months of pandemic. And over the last 2 years, with the Fed raising rates 11 times since 2022. But with interest rate hike cycle likely over and cuts beginning in 2024, the macro and microeconomic outlook for AGNC and other mortgage REITs remain robust. Peter Federico said, once uncertainty associated with the current market environment subsidies, a durable and attractive investment environment will emerge. And Wall Street agrees. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find a link to incomeinvestors.com in the description below. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.